Hi, and thanks for stopping by my market report. My name is Mike, and my market report is about mortgage rates, what drives them on a daily basis, what goes into uh, the pricing, what goes into why they go up and down, why you see differences around, and a little bit about myself is I'm a loan officer. I work with a national lender, so if you got questions about mortgage rates, you got questions about mortgage programs, uh, different things like that, if you're looking to get pre-approved to buy your next property and finance it, or looking to refinance, please feel free to reach out. I'm here to help. Without further ado, let's just start the report. We'll start off with economic reports, which drive the markets today. And today, primarily, we are looking at inflation on the consumer level, and that is the Consumer Price Index, or CPI. The month over month for the month of March was we had back in February was 0.4% growth. Increase forecast count for 0.5% and exceeded that 0.6%. Now, if you look at that on an annual basis, we were at back in February at 1.7%. Our forecast count for 2.5% spike, and it jumped out up to 2.6%. So a pretty big spike there, 0.9% increase year over year in terms of increase of inflation there. So that's a pretty big, and we've been seeing that in our energy and of course also our food. Now, speaking of such, when we strip that out, we get the core CPI, and that's kind of what the Fed really will look at more so because those are variables that are not controlled. So it's month over month for the core CPI. February was 1.1%. It was forecast count for 0.2%, and it came up 0.3%. Its year over year was from 1.3% in February, con for a forecast of 1.5, and it went up to 1.6. So it jumped up, but not as much as the headline, which contains the food and energy. And the food and energy, as we all can attest when we go to the grocery store and the gas stations and everything else, we've been seeing those spike up. So let's go ahead and take a look, see what's going on in headline. Oh, also, I'm sorry, later today we will also get 30-year bond auction. So this could be more of a factor in terms of what's going to happen with mortgage rates. That could drive if there's demand or not demand for investors buying mortgage 30-year bonds. But let's go ahead into the headline news. Stocks are a little mixed today. Dow is in negative territory, whereas S&P and Nasdaq are both up. Big spike happened with the announcement of J&J vaccine suspension. There's a couple cases from women who are getting blood clots after taking it. So right now they're temporarily suspending it and reviewing it to see what the issues are. But in any case, that's kind of stirred the markets a bit. We also got a few Fed speakers out there today that'll be speaking. And of course, what they say, everybody's watching what the Fed's going to do. Are they going to taper? Are they going to go ahead and raise rates? Stuff like that. So there's not a lot of trust, to be honest, with the investors and what the Fed's saying out there. They just can't fathom that the Fed's not going to raise rates, even though the economy gets really hot when they think about it. So let's jump ahead, take a look, see what's going on with mortgage rates. We had a rollover, so it looks worse than what it is. It looks like because it's way down here, we had a rollover. What that is we take the month end for the month of April. So those bonds already packaged up. So now we're starting May's packaging. So every 30 days approximately, we get these rollovers, and they reset in the pricing, but it doesn't affect the mortgage rates, if that makes sense. We just kind of reset where the pricing's at, and then we work our way from there. So this looks not too good on the charts. However, we're up currently 27 basis points, and that gives us much better pricing today. So a lot of lenders have repriced for the better today in terms of what's going on with the markets, especially after that inflation data. This is kind of surprising that we are upwards. So they're kind of ignoring that data right now. Here's yields. Yields did drop a little bit down. We did start up higher with the vaccine. Now we're down to about trying to test its 25-day moving average. We're down to about 1.65 level right now. Yesterday we were about 1.67, and today we're about 1.65. All right, so that's pretty much the news for the day. Again, we did get an improvement today with our pricing, so that's good news for those who are looking to buy or refinance. So congrats, and if you guys got any questions, please feel free to reach out. Otherwise, we'll see you guys in tomorrow's report. Thanks for watching. Bye-bye.